You're having trouble trading trend days, and it's because you're always trying to catch the knife, catch the reversal. Classic retail strategy. Guys, I've been there myself. Trend days used to be my worst days. Now they are some of my best days. So in this video, I'm going to break down the psychological as well as some of the technical ways that we can identify that a trend day might be about to happen. Ultimately, trading is very similar to poker, where we're playing probabilities and we're managing our risk according to the most probable outcome. Okay. If you're new here, my name is Forrest. I invest stuff and I think that everybody should too. I have a Discord where we day trade live every single day during regular trading hours. The link is down below. It's wap.com/tradeedge. That is where you sign up for the Discord, and a little freebie for you, a free trading journal to help you journal your trades. I think that you cannot improve what you don't measure in all aspects of life, but especially the things that are really super duper hard, like day trading. Let's go ahead and get into it. All right. So one of my superpowers as a futures trader is that I was day trading options for years and years and years and years before I ever even looked at futures. So I'm very, very comfortable and familiar with the options chain. You can see here on my SPX chart right here that I have some things already marked up. This is the chart that I actually used to trade. I didn't make this for this video. It's looked like this for a little while. Okay. So let me actually break down what's on the screen for you right here. First, what is this application? This is TradingView. If you're looking for a charting tool, I think that TradingView is the best charting tool. Don't have any affiliate with them or anything like that. Just go to tradingview.com, sign up, guys. It is well worth the investment. This is where I do all of my charting. It's the most flexible. Every single broker has their own charting capabilities, and some of them are very, very close to TradingView. It's nice to have that built into your broker, but I'm telling you, if you want the ability to just mark up charts over time, TradingView is definitely the best bet. Go sign that up, especially if you want to copy kind of the setups and things that I have here. I can export this as a template, share it out with everyone. You can actually have the exact same charts. So it's really handy in that case. In terms of indicators, typical candlesticks, I've turned my red bars to black. So that's why that looks like that. And I have the session volume profile on here. Quick little recap of the volume profile. And this is going to be very, very important as we talk about options as well. The volume profile shows us volume at price. I have an in-depth video talking about the volume profile. So if you want to understand why volume at price instead of volume at a moment in time is very important, go ahead and check that video. I will link it right here, somewhere around here or in the description. So that's what we see here on the session. So we have the session volume profile. We can see it for every session, and that's it right now. So let's actually go ahead and turn that off. We don't need that just yet. And really what I want to look at is for this past week from, let's just say, the open on Friday, the 23rd, coming to this past Friday, March 1st. There was this huge amount of open interest at 5,100 calls. So I have it marked as OI. OI stands for open interest. Now, the reason that this is important is if we go back in time, okay, on this Friday, we had a double top short that played out. Okay, Friday, February 23rd, there was a huge amount of open interest at 5,100. This was a short, and I actually covered this in a video, I guess a week ago at this point. I took this short. There was a double top technical setup on ES. Okay, I trade ES futures. I'm looking at SPX. Let's open them up side by side. So here is the SPX chart. Let's open up ES and let's go back to Friday, the 23rd. Here it is. Okay, and let's go ahead and clean this chart up a little bit. We'll get rid of all of the indicators. So here we can see at 5112 at the same time, right? The time is the same. Over here, that there is this double top that formed right around here at 5111.50 on ES, which is 5114 on SPX. So how do these play together? ES and SPX are both indexes of the S&P 500. There's a huge amount of interest at 5,100 calls. What does that mean? That means that there are a ton of open positions. What does that mean? So if you go and say, hey, I want to buy a call, I buy a 5,100 call for 25 cents near the end of the day. It's a 0-dated contract. Okay, that would be +1 open interest to the open interest at 5,100s. On Friday, I don't remember off the top of my head, but the open interest for this contract was well over 100,000. Okay, and what will happen is you'll have open interest on every single one of these strikes. Okay, and the reason why this interest was so important is because it was exponentially bigger than the interest below it. So let's actually draw what that looks like. Okay, and this is going to be more of an in-depth video, but this is pretty important. I can't show you the option chain right now because I don't have the data, but that's why taking notes is so important. I'm trying to talk and find this tool at the same time. Hold the phone. Just want a box. Okay, so right here at 5,100, I'm going to draw the open interest using a bar chart for every one of these prices to make it make sense. So at 5,100, we're going to do a bar that's this big. Then at 51.95, we'll do, I don't know what the shortcut is for this shape. Command Shift R. Okay. At 95, we'll do one that is this high. Okay. Nope. I want to do Shift R. And then we'll do another bar that's maybe like this. at 5,090, right around here. So if we looked at the interest, if we actually did a histogram very similar to the volume bars, and we said how much interest is at every one of these strikes, this is what the option chain looks like on Friday. Something very close to this. It's not perfect. I'm doing this for the sake of example. So for every one of these strikes, 5,085 had this much interest. Maybe this is a little bit higher. Okay. But there was a very clear wall at 5,100. So I have to ask myself, okay, if this is what the bar chart for open interest looks like at 5,100 on the call side, okay, and we're ignoring the put side for now. This obviously is the biggest bar, okay? If this is bar chart, and we'll just do an option V here, okay, this side is 0, okay, and over here is, the height of this bar is, let's just say that this is 120K, okay? This bar is 120K. And this bar is like 40K, okay? And this bar over here is, we'll say it's 45K. For the sake of example, put some numbers on here, open interest. We're drawing this. So this is the open interest for the contracts. We're looking at the chart. We come up, we have a double top technical right here at this price. Okay, 115 happens in the market, which is right around here. I know there's a lot going on, stay with me. We have this shape right here. I want the brush tool. Nope. I want the brush tool. So we have here, comes up, and we're doing like a double top maneuver. So the double top is nice, okay? But it is Friday. We're not even looking at the volume profile right now, but it's Friday. We had a double top. We could add in the session volume profile, see where that was at. We can see that the POC is lower. There's a lot of reasons for this to reject. But in terms of setups and what this could mean, this is like an A setup because there's so much confluence. And there's so much reason for this to energetically reject off of this level. Okay, so we get that rejection, it rejects, and we had that Friday setup. So why does this matter for a trend day though? I spent a lot of time breaking this down, okay, because this is a super important concept about this OI. This OI wall here was here for the entire week, okay? So we rejected it on Friday. This was the first rejection. Okay, play these bars through. Every single day, there was a ton of OI here. Okay, this wall was here the entire week, guys. I want to make that very, 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 very clear. The entire week it was here. Even though we're below 5,100, we eventually come back to it. We crack it. You see that there's this rejection here on Thursday. So Thursday we come up. Thursday we come up. They put all of the 5,100 out the money on Thursday. Okay, look at this wick right here on Thursday. So Thursday we come up to 5,100 again. We're right here. Keep grabbing the 0 by accident. We don't want the 0. Get that out of here. Okay, this is the 5,100 wall. 5,100 wall. It's right here. Thursday, we hit the wall again. We crack it, okay? So Thursday, they put these out the money at close. You can see it's 345. After the close, we drift up. So Friday, they start moving it up. And you have to ask yourself the question, okay, for the past few sessions, we've ranged inside of here. And I know there's a ton of stuff on the chart here, but just really, really put your thinking cap on, guys, okay? There's a lot of stuff on the charts, but all this stuff matters. We're just looking at SPX. We're inside of this range here. We could zoom out to the macro, maybe the daily, see what's going on the daily. It's a little bit too messy on the daily to do that. But we're doing all your TA on every single time frame. Go back to the 15-minute. We get to Friday and we crack it. Knowing that there's been a wall here, not just an open interest, but an actual substantial wall here. And we finally cracked that wall. Think of energy momentum in the market, okay? And this is the tip for you guys. Okay, this is really how we can get some intuition and edge as discretionary traders, which is what we are. We're trading with this discretion. As discretionary traders, we have to keep track of these things that are happening in the market. So we see a 5,100 OI wall is there every single day. The next session later opens above it. We open above the wall. So all this energy that has been stuck behind the wall can now release, okay? And now we have the opportunity to just trend up. Also, looking at the open interest on Friday across the chain, there was a very even distribution. So if I were to redraw this bar here, these bars here that I did here for an example of the histogram for open interest, on Friday, it was very smooth on both sides around the price. This is a very important concept, okay? I'll draw it this time, and I'm not gonna do a histogram, I'll just do a brush tool. Imagine that you saw the open interest here, and it looked like something like this, okay? So instead of doing bars like this, okay, I'm just gonna do a shape. So the shape of the open interest was something like this, okay? It's very smooth, going up and down price, okay? There was no level on Friday that was sticking out like this. It was a very smooth curve, which is very, very important. It's an important distinction because there was no wall to stop us from drifting. There was no interest level that was substantially bigger than the level right next to it. A very flat curve, which is what you see on most days, okay? I know that's very in-depth, but it's important. As a futures trader, we're talking all about options right now, okay? We're talking all about options on SPX. This is what I look at when I'm trading ES, guys. This is a superpower. I'm getting you, I should package this up, put it in a course, which is a whole other thing. I should, but I'm telling you guys, this is a straight up superpower. So we have this huge amount of interest that the market is rejecting, the auction is rejecting. Okay, we're not even looking at the volume profile here. Okay, if we were to add or plot volume profile and interest on these contracts, okay, this literally is a histogram here. This essentially is a volume profile, what I drew. You can start to understand why the volume profile makes sense. So you can actually look at the volume profile on these contracts. And I essentially overlaid one without you knowing here using the open interest histogram. So when we talk about volume at prices, okay, even if we're not talking about the underlying, if we're not talking about SPX here, we're still concerned with volume at prices. In this case, the volume is just open interest. So we have a volume profile for interest, which is what I've drawn here. Okay, does that make sense, guys? I created a volume profile for open interest. That's the key on SPX. Cool. So we have this index called ES. So we go to ES. ES has the same general structure as SPX. Obviously, it trades overnight. So this gap here doesn't exist. We had the nice little sell off overnight. Okay, it came down, and let's put on the session volume profile here. And we can see what happened on ES. So ES comes up Thursday. We close here. They smashed it, right? This was that Thursday where they smashed it under to take those out the money on SPX, right? We talked about that. There's that smash candle here. Let's actually zoom in. Okay. This is that smash candle, big top wick. They smashed it on ES as well. And then they started drifting up. In general, this was a bullish day. We can see here that we have a P, uppercase P distribution on the volume profile. Okay. Nice little letter P, which means the auction was centered around the upper side of the session. We closed above POC technically, okay, which is also bullish on a close. It's pretty close, evenly distributed on the top side of this P here. Nonetheless, though, given all the context of what I just said on the option train, is very likely that we're going to drift up. So overnight we sold off. We came into the POC, which is pretty normal for, you know, overnight activity. Come into where there's some liquidity. So they sold it off at 3 a.m. EU session. Actually, it looks like EU, they rejected this, ended up being the session VAL, but came off, dipped down here into the structure, scooped up all these people, and then they just bought it up, drifted up all day. On voice on Friday, I literally came in the morning and I said, like, probably 7 times. I came into the Discord and was like, hey guys, there's not going to be a good entry on a drift up day like this. I looked at the option chain, it was very flat, which literally was the signal to me of like, this is going to be very drift up because the option chain is not jagged, which means there's no reason for us to get to a price, especially when we're in price discovery mode. Okay, at the top of the market, we have a ton of upside energy that's being released. There's no particular price where I would expect a strong reaction. Now, it is an auction, which means people can come and participate as they please, but this is also a game of poker. It's a game of probabilities. So I can't play for the least probable outcome. That's silly, right? Obviously, there could have been a big sell-off on Friday. There wasn't, but what was most likely and what did happen was that there was a grind up with no exceptionally good entry. And I said this like 3 times in the morning. I was like, guys, there's no good entry. You either don't trade or you just go long. We spent a lot of time, talked about where to put your stops, regardless of where you enter, either under the 8, something like that, under one of the previous wicks. But on a trend up grind day, you can see how vertical this is. There's no point where you're like, I should get in here. One of the other thing that's really hard for new traders, if we go to the 5-minute, is every one of these pullbacks, people get really, really bearish and they feel like it's going to start selling off. So people go short here. Okay, so we have this little top right here. We come down and a ton of people load in short here. And if you actually look at tools like Bookmap and things like that, every time these pullbacks come, humongous amount of stops get ran. There's a humongous amount of stops get ran. Okay, so they run a bunch of stops, they load the boat up. Once they pass this prior level here, a bunch more stops get ran here from the people who went short, and it just continues and continues. But there's no good entry. You literally just get in long and you just hold. But unless you have that thesis, it's impossible. Which is why the title of this video is Trend Traders are Real Traders, right? Trend days. If we look at the opportunity that was here, what was the opportunity on Friday? Okay, 60 points on ES. If you would have traded this on NQ, which is what I did, on full transparency, I did not capture the entire move. I captured like this much of the move, later third. I got a little something in the morning, but this was a 339 point. Okay, RTH though, if we just go to RTH, which stands for the regular trading session, where do we actually open at? Around here to here, 230 points. Huge day overall, huge amount of opportunity if you just buy and held and just play it slow. You're not looking for any reversals. You're not doing anything crazy. You know, you're literally just buying and holding. And can you imagine doing this on the higher time frame? This is why trend traders make so much money. If you can just buy and hold on the higher time frame in a trend, is 2,000 points. You're not going to outperform that. So hopefully this video is a wake-up call to how you could do this TA. I did this on a 1-week basis. This was an essentially, how can I understand what happened in the week to make a trade within a day? Okay, imagine zooming out. How can I analyze a month to make a trade within a week? How can I analyze 6 months to make a trade in a month? Okay, how can I analyze a higher time frame to understand what might happen on a smaller time frame in support of the bigger narrative? That's how you combine macro with micro analysis. I'll say that again. How can I analyze the higher time frame to understand what needs to happen on the shorter time frame to support the bigger narrative? Okay, what some people do is they try to understand how the last 5 minutes will affect the next 5 minutes, but that's too binary, right? You need to look at the past hour to understand what needs to happen in the next 5 minutes to support the next hour. Does that make more sense? A lot of concepts in this video. Trend trading is super duper important. Like I said, don't feel bad. Trend days used to be my worst days because I'm a very, very good technical range trader. I'll say that. I'm super duper good, and I'm not just tooting my own horn. If you've been in the Discord, you've seen that. There are some days where I'll snipe reversals and prices to the tick, guys. The problem with that is that I was looking for those too often. Always looking for the sniper reversal. I wasn't even leaving myself open to the possibility that it was a range day. I wasn't opening myself up to the possibility that it was a trend day. When you don't open yourself up to that possibility because you're really good at something, you will end up just being red on that day. Straight up, you'll just be red on that day because it will never come. Or you'll end up flat or like, having a $30 day, which is very possible. So I just want to give that to you all. I'm not perfect either. I'm very far from perfect as a trader. Profitable, but I'm very, very far from perfect. And every lesson that I'm giving you guys is stuff that has happened to me. It's not just stuff that I've heard. Okay. These are all things that have happened to me, which is why I'm telling that. I could tell you that they happen to people. They happen to me. I've done it. Okay. But, ultimately corrected that by using all the tools in my tool belt, expanding how I think about the market and having a plan for the market in particular. So every single day I have to ask my question, okay, what's happening on the option chain? What's happening on the macro that could allow us to have a trend day? Is there a bigger story that I'm missing that the market's trying to tell me that I'm missing out on because I want to catch a quick 30-point wick? 30 points is nice, but what if I get 150 points? That's easy. The last thing I'll say in this video, which is an important concept, is trade the easy trades, guys. This is something that I see most people struggle with, at least in our community and just in general, is there's a very easy setup. Maybe they catch like a double top. And, wow, man, that was easy. Got a quick 45 points. So honestly, the trade is super simple. You make your money fast, you're done. And then they spend 4 hours trying to do the hardest of trades, just grinding like, oh man, I was almost there, and chopping themselves up. It doesn't matter. In my opinion, this is more subjective. It doesn't matter if you're right in a trade if it was hard, if you were uncertain, okay? The only trades that you really want to do are trades that you're certain about. It's easy. Honestly, you can leave your desk, come back, okay? Because those are the ones that you're going to be able to do over and over again. Those are the ones that you're going to be able to lever into in the future, which is key. As a trader, ultimately, the base hits are cool. And you need 1 million base hits. You need 1 million base hits, okay? Those are so important to like building your journal and your logbook of data. But eventually, you need to have A trades that you can lever and like 3x or 4x your size. Like you need those. Otherwise, your P&L is going to take forever to grow. If you're levering into uncertain trades, your P&L is going to go the opposite direction. And it's going to be very, very frustrating. It's going to be exceptionally frustrating because you're going to have days where you do the easy trade and then you lever into it an uncertain trade. And even if it plays out in your favor, you might get stopped out or cut it early because you're uncertain, right? Which is why easy trades. Trade the easy trades, guys. Figure out how to find the easy trades if you don't have enough of them. Anyways, I'll stop because I could go on about this forever. I see so many people. It pains my heart, honestly, when I see people chop themselves up after being green in the morning and not following their plan and things like that. And we all do it to a degree, but that's why we're here to help. If you need help with that, again, join Trade Edge, our community. Special promotion right now. You can use code MARCHDIFF, MARCHDIFF, all capital letters, when you sign up on wap.com/tradeedge. That'll give you 20% off of your first month on top of the 7-day free trial. Only doing this for March. Reach out to me, tell me use the code, and I'll happily greet you to the community. Our community is focused on live trading, right? On voice. So we've got a lot of feedback recently of people trying to get us to add more things, which we are doing, right? So we're going to try and post more of our analysis and things like that. But one of the things that's different and honestly better about our community is that we trade live on voice for more like a trading pod with the express purpose of helping people and explaining our thought process as we get into and out of trades and helping people get into and out of trades themselves. But we're not a simple call out server where we're going to say, hey, go long right now, exit right here. Because what's going to happen is, because we do that sometimes, like we say, hey, I'm going long. people get shaken out. They don't understand the thesis or the setup. And so a trade that we make money on, people will lose money on. Or a trade that we got out of after we called it, people don't understand why we got out. And they're like, hey, why are you doing this? So it's like, well, even we're wrong. So then that's okay. But that's why we cut it fast. So yeah, join the voice if you can. We're posting more market analysis and stuff like that. Either way, we'd love to have you. Subscribe to our channel. See you in the next video. We're almost to 7,000 people on the Futures Force, which is just amazing. The journey has been awesome, guys. I'm super blessed and grateful for all of you. I know this outro has been so long. I wanted to take the second to say thank you to everybody who's trusted me with your time, who's trusted us in the community. I do not take it for granted at all. And I'm trying to improve every single day, honestly, to serve you guys. Because again, you could be anywhere. So I do not take it for granted that you're here with us, either on this channel or if you do join us in Trade Edge, there as well. Honestly, just thank you. Anyways.